welcome again to this educational video that makes your trading more proficient and profitable. Now, this is the long awaited strategy that so many people have not known, that have eluded them, that's making them lose their money to the market every day, making traders frustrating. Here I'm here to teach you a strategy that will give you an emotional balance and confidence in the market, where you will not need to lose your money to the market no matter how long you hold a trade, or even though you're a scalper, a day trader, or a swing trader with your little money. You don't need to come and be losing your little $10 that you're starting with to the market. With this strategy, you would not only have to lose a naira, a dollar, or a cent of your capital to the market. It is called the hedging strategy. The hedging strategy has been hidden. Not too many platform brokers or crypto platform likes it, but that is the only way you can survive the market and win big over time. So this is how it works. In the normal trading where people do, they will teach you how to use your stop loss. Okay, I'm in a trade now, I'm losing $300, and this is a $100,000 account. I'm losing $262. It is either you cut your loss normally based on where this market has been. You are taught that you put your stop loss above this place to lose $1,100 to the account. If BTC comes back to 121,000, that's what they will tell you. Or they will tell you to put your stop loss here, up here, based on the previous volatility where BTC has gone to. That's what they taught you. Now, I want to teach you a strategy that you don't have to lose your money like this. It is called a hedging. So how do you hedge? It doesn't mean that you can actually, for example, to hedge is to actually have a counter trade where you have a buy and you will have a sell. But I want to teach you how to set it. So in the place where you're supposed to put your stop loss, that's where you put your counter trade. For example, I have a stop loss here, so I'm going to remove the stop loss. Let me remove the stop loss. Let me modify it. I'll remove the stop loss and I'll remove the take profit. In this strategy, you don't need to have a stop loss and a take profit. So what you do is this. On MT5 forex trading, in the place where you are supposed to put your stop loss, you put what is called a buy stop or a sell stop. Let me show you how. Now, you know you're supposed, there's a buy limit. Now, when you move this buy limit up, it becomes a sell limit. Now, let's say this is where you're supposed to put your stop loss. The market comes here, because you are in a sell, it takes you out of the market. But what you do in this strategy, you see this telling me, you tap on it, it turns to buy stop. So you put a buy stop here and activate it. Now your buy stop is up here. So if market goes up to this place, instead of you to lose $700 to the market and it be deducted from your balance, the market buys for you here. If the market buys for you, instead of the $700 to go out of your equity or your balance, it goes out of your equity, but your balance will still be the same thing because we have not closed it. So, for example, let me buy. Let me remove the buy stop. I'm just saying that I just use that so I just use that to show you something. Now I have a buy and a sell. So if my sell is increasing in minus, my buy will be increasing in profit. So if BTC comes back up here, my buy will be in a profit of $400, while my sell will be in a loss of 700. Unlike when you would have put a stop loss here and the market takes you out with a minus of $700, your buy would have given you a $400 profit. So what you will be losing as at when the market gets here will just be $300. That means $400 minus what? Minus 700. Look at it. You will have about $400 or $500 minus $700. So you'll be losing just $200 to the market, and it is not a loss. And what you need to do is, because you are a trader that have analytical prowess, must be an analyst, a technical analyst or a fundamental analyst. Then you will wait. You know that the time that, for example, if this is the only trade I'm holding, the sell, I will be panicking now that, oh, I'm about to lose $200, I'm about to lose $200. And you know the market is an up and down thing. So you'll be afraid, emotional. But with this now, you are not losing money yet. You allow the market to play out. You have a buy and a sell. So if market is coming back down, what will happen? Your sell will be going into profit, even though your buy is going into negative. And there is what is called double top and double bottom in BTC, in trading. What it means is that wherever the market has been to, there is 95% chance that it will touch it again for the second time. And that is the advantage of this strategy. Like now, on this 1 hour time frame, there is 95% chance that BTC will touch this place again to give us a double top before it cannot pass it. So if price comes here and give a double top, what you should now do is to close your buy. And because market has touched this place, all these levels, market has been here, market has been here, market has been here, market has been here, there is 90% chance the market will still come down here. So if market comes down here, what you do is, if market comes down here first, it's first in, first out. If market comes down here first, what you should do is to close your sell and wait for the market to retest this place. Then you close your buy. So it now depends on where the market goes first. Like you're having a sell and a buy here now. Instead of you to close in a loss of 200 or 100 or this one, we wait for that first in, first out, because the market will always do a retracement or do a double top or a double bottom, either on the 4 hour, daily, 1 hour candle. You can see it. So if the market is coming down to this place, trying to retest this place it came off from, what you should do is to close your sell. Then wait for it to touch this part again. You now wait for it to come back here, because it's supposed to 90% to touch this place for the second time before you finally look whether it's breaking up or breaking down back. So that is what is called hedging strategy. It makes you help your emotion. I want to show you this strategy. On a low time frame so that you will know what I'm saying. For example, based on this 1 minute candle, what am I supposed to do? Or let's say 5 minutes candle. I'm supposed to sell here so that it comes down here, comes down to this place. But if I sell here and market decides to start going up and start flying up and start flying up, what I should do is to set a buy stop up here. I'll sell here and do a buy stop where I'm supposed to put my stop loss. That is the place where you are supposed to put your stop loss. Put a buy stop there. Let's say your account is $100. Your stop loss is $10. In that $10 place, put a buy stop or a sell stop, depending whether you are on a sell or you're on a buy. Once you do that, the market will hedge for you and your money will stop reducing. It's only your loss or your profit that will be increasing. Then you will now wait until your market, you have a balance. Maybe yes, you took that trade emotionally. You didn't see well before you took that trade. You will hedge it. Then until you're able to see clearer and take your profit, depending on first in, first out, like I told you before. So that is hedging strategy. It puts you in a position to make a better decision that you hurriedly make. You now have a time to make a better decision than when you close your loss. Okay, for example, this sell was in $300 loss before. If I was having a small account and I closed it, now the market is coming back to me and I have closed it in a larger sell, in a larger loss. Now the market is coming back to me. The same way, my buy now is increasing. But you will see that before 1 hour or next 4 hours, the market will now start buying. And if I have closed my buy in a loss, my money have reduced and the market will still come back to me. So this strategy helps you to get your balance and stop losing your money to the market. That is the advantage. To make you take only profits and curb your emotional trade. When you have known that you have entered an emotional trade, this is what to do. Of course, you should have a perfect entry and a perfect exit. But instead of you to close in a loss, like I told you, this sell was over 300 when we took this trade, when we came here. But now it has reduced. So if I have closed $300 as a loss, thinking that the market was still going to buy, I would have lost that money from my balance. But because I hedged it, my balance or my equity was remain static. You can see that no matter what the market is doing, my equity is not changing. My balance is not changing yet. Now my buy is increasing in a loss while my sell is reducing. And my sell was the highest before. What am I going to do? Am I saying that I'm going to close my buy? No, the market can still come to me. May come to me. Of course, looking at the chart, BTC still have a long way to cover up there. See, BTC still have a long way to cover up here. See where BTC has been before. Let me show you. BTC has been here. And don't forget what I told you, the law of double top and double bottom. BTC should still touch this as is because it has touched it before. It should touch it the second time. It should touch it the second time, just like what happened here. It was here before, and this is the second time it touched it, even though not perfectly. So that law must be in your mind when you are treating this strategy, whether on the 1 hour, 4 hour, daily, or weekly. Even on the weekly, you can see how many times it's touching it, touching this area. On the 4 hour, you can see that if you squeeze it, it has been here before. It It has been here before. It came down here. It has been here before. It came down here. Now it touched it again and break above it. Now where is it going to now? It's trying to locate this place. Look at it. Look at it up here. This is where it's trying to produce a double top from. So you don't be in a hurry to close your losses and be looking for extra money to start all over again. Now, if for example your equity has reduced, you just hedge your trade here. Then what will now happen is when you add more money to your account, you will now have the ability to trade even more peacefully. I want to show you an example of what I just tell you now. Okay, look at this account. The balance is $200. Equity is just $4. I have a buy to buy that in profit of over $400, and I have a loss of $600. Now, look at how this works. Now, I'm very confident that BTC can still come up to this level of 123, 124,000. So all I need to do is just allow this trade to ride. Or I can fund more money to my account. It will not add up to my balance. Instead of the time I would have lost all this money to the market when I had this sell loss, when BTC decided to pump. I would have lost the whole money, but I decided to take a buy to counter it, and that's why you see that my buy is in profit. So if I fund this account with $50 or $100, when BTC gets to this point, I can close my sell and allow BTC to retrace back. And as BTC is retracing back to the bottom, I will be in a mega profit. So that's how the strategies work. Instead of you to lose your money to the market, you hedge it. That is how the strategy works. It gives you peace. What it gives you is that it makes you realize that you are not losing your money to the market and starting all over again from the scratch. But it gives you that comfort. Now, no matter what BTC is doing, I'm not afraid. I'll have a more ample time, more clearer time to make decisions to know whether to close my profits or still allow it to ride. So that is how it works. So subscribe to my channel, give us a like, share this video for other people to learn this hedging strategy and stop losing their money to the market and make wiser decisions. Now there is a promo. I'm going to drop a link of my SNES account, affiliate account, IB accounts on this place. If you register with it, you will get a bonus, a welcome bonus, using my link to trade. A welcome bonus of up to 50, 100, depends on how much you fund with. And you will be having a discount in your spread. That is the partnership we've been able to secure with SNES. Now, this strategy also works on the crypto platform. I told you about the buy stop and the sell stop. On the crypto platform is different. Let me show you. This is Bybit, it's a crypto platform. I'm on a trade here. This trade is in a loss. Now, I took a shot on BTC and BTC pumped. But as you can see, BTC is retracing back a little. coming back down. No, it has even started pumping. So the buy that I took on the forex platform is now going to be in profit, while the sell has increased. So the market can be very deceptive. So your hedging strategy is what gives you a calm until the market plays into your hand. Now for this, I can say I want to put a stop loss here, up here, to lose almost $5,000. Can decide to say, okay, let me put a stop loss here at 12700. And how much will I be losing? I will be losing over $6,000. Now, instead of me to do that, I will do a setting. In crypto, you will not see buy stop or sell stop. There is what is called in Bybit conditional. We have the limit order, market order. Now we have conditional order. Now, see how you do this one. You will set where you are supposed to put your stop loss. You set a conditional order there. Let me show you. See, 120. I'm moving it 700. See, I'll set a conditional order there. What the conditional order means is, but you still need to have money here. You are saying that if BTC gets to that place, it should do a buy for you. Now the conditional, what you need to do is this. You know I was using 10S and now I'm already in minus. What you need to do is to increase your leverage. Increase it to the highest, 50S. Now you have money in available balance. Before, when it was 10S, I was having a minus. No, I cannot even increase it. I cannot reduce it anymore. Okay, let me try. Let me try to reduce 25. Reduce to 10. 10 cannot reduce. Now, you increase your leverage. If you want to do that setting, you increase your leverage so that you can have money in your available balance. And you will not set. See how it works on. The quantity of trade I took here is position size $8,000. 8,075. So it's the same way I will take the same size here. This is how the hedging on this part work. 8,000 something. This one is 8,090, but 8,200 thereabout. Now I will do a conditional order in 12700. That if BTC gets to that place, instead of taking me at a stop loss, it will buy for me. You know I'm in a short. I'll do long. Bam. What the conditional order does for you, it does not reduce your balance, but it has an order there. Look at it. BTC perpetual open long conditional is on the condition that if BTC gets there, it takes a buy for you to counter it instead of losing the money, to counter the trade. Once you counter it, what happens is that your balance remains the same. Then you will not have the time to know when to either close your profit or your loss. Close your profit. Always you close your profit and allow your loss to recover back, to retrace. So you should not know when to close your profit when you know that it has gotten to where the market is struggling in the direction of your profit. You close your profit. So as the market is retracing, you are making money on the retracement. So that is how it works. On crypto, you do conditional. I will do another video to show you in how it works in Bybit and in other, in maybe Binance, Nexi and all other one, how you would do those settings. So give us a like, subscribe to this channel for more of this kind of educational video. God bless you.